Did you know that over 80% of millionaires build their wealth primarily through cash-flowing assets? In 2024, this type of investment is becoming even more essential as we face rising inflation, economic uncertainty, and market volatility. For anyone serious about building long-term wealth and creating financial stability, cash-flowing assets should be at the top of the list. Investing in these types of assets doesn't just help you grow your money, it also offers a steady income that can be reinvested or used to cover daily expenses. Today, we'll go in depth on some of the best cash-flowing assets to consider, including real estate, dividend stocks, and peer-to-peer lending. I'll explain how each works, their benefits, and even share a compelling case study that demonstrates the powerful impact these investments can have. So, what exactly are cash-flowing assets? These are investments that provide regular income, either on a monthly, quarterly, or annual basis. Unlike growth-oriented investments, which rely on capital appreciation, like stock price increases, cash-flowing assets are designed to pay out directly, generating returns you can count on. This steady cash flow can help you build a passive income stream, which over time can lead to financial independence. Cash-flowing assets are not only about income, but also about diversifying your portfolio in a way that offers more stability. For example, when the stock market faces a downturn, having cash-flowing assets like rental properties or dividend stocks can help balance out potential losses. Let's break down some of the most effective cash-flowing assets for 2024, starting with real estate. Real estate has long been considered a cornerstone of wealth building, and for good reason. Rental properties, in particular, provide a consistent income stream from tenant payments. The basic idea is simple. You buy a property, rent it out, and collect rent payments every month. If managed correctly, these payments should cover your expenses, like property taxes, insurance, maintenance, and mortgage payments, leaving you with profit each month. One of the greatest things about real estate is that it tends to appreciate over time, which means that, in addition to cash flow, you also gain from the property's increased value if you choose to sell it later. This appreciation can help you build equity, which can be tapped into through refinancing or by using the property as collateral to buy more assets. Beyond cash flow and appreciation, real estate offers tax benefits. You can often deduct mortgage interest, property depreciation, and repair costs, which can reduce your taxable income and further enhance your returns. Now, let's dig a little deeper into different types of real estate investments. Single-family homes are a popular choice for beginners because they're generally easier to manage and have broad appeal for tenants. However, multi-family properties, like duplexes or apartment buildings, can offer even higher cash flow, as you're able to collect rent from multiple units within a single property. While they may require a larger upfront investment, multi-family properties can generate higher income and reduce the impact of a vacancy on your overall cash flow. Then, there are commercial properties, such as office spaces, retail buildings, and warehouses. These tend to come with longer lease agreements, which can provide stability, but they also require more significant capital and sometimes have higher risks, especially if the commercial real estate market is down. Another increasingly popular cash-flowing real estate option is short-term rentals, like Airbnb properties. With short-term rentals, you can often charge higher nightly rates, especially in tourist-heavy or business districts. However, short-term rentals require more hands-on management and can be impacted by seasonal demand. It's also important to be aware of local regulations, as some cities have strict rules around short-term rentals. Moving on to another type of cash-flowing asset, let's talk about dividend stocks. Dividend-paying stocks offer a straightforward way to generate income by investing in companies that share their profits with shareholders. Unlike growth stocks, where you rely on the stock price rising to make a profit, dividend stocks pay you regularly, typically every quarter. Many of the most reliable dividend stocks come from well-established companies with stable earnings, like those in the utility, healthcare, and consumer goods sectors, because these companies operate in industries that tend to stay stable regardless of the economic environment. Dividend stocks can be a valuable part of a balanced portfolio. For example, utility companies often provide essential services, so they tend to perform well even during recessions. Investing in such stocks means you'll receive regular dividend payments, regardless of the stock's price movements. This makes dividend stocks particularly attractive during volatile market conditions because they provide income stability, even if the stock market is unpredictable. You can also look for dividend growth stocks, which are stocks and companies with a history of steadily increasing their dividend payments over time. Dividend growth can further boost your income as companies raise their payouts. Now, let's explore peer-to-peer. P2P lending, a relatively newer but increasingly popular option for cash flow. Peer-to-peer lending platforms connect individual investors with borrowers, allowing investors to lend money directly to people or businesses in exchange for interest payments. Essentially, you become the bank. The returns from P2P lending can be higher than traditional savings accounts, often ranging from 5% to 15%. Depending on the borrower's credit risk and loan terms. One of the benefits of P2P lending is the ability to diversify within the platform itself, as you can spread your investment across multiple loans to mitigate the risk if a borrower defaults. Platforms like Prosper and Lending Club often offer various loan options, allowing you to select loans based on your risk tolerance and expected return. To make P2P lending work for you, it's essential to evaluate borrowers carefully and diversify your funds across different loans. While P2P lending can be rewarding, it's worth noting that it does come with higher risk compared to other cash-flowing assets, especially if you're lending to higher-risk borrowers. However, if you're willing to put in the time to research and diversify your investments, P2P lending can offer a strong cash flow with competitive returns. To bring all of this to life, let's look at a real-world example. A friend of mine started investing in cash-flowing assets just a few years ago, and she's now seeing life-changing results. She began with a modest rental property, a single-family home in an area with high demand for rentals. After covering her expenses, she was earning a few $100s each month. As her property appreciated, she was able to refinance and used some of the equity to purchase a second rental property, which added even more to her cash flow. Meanwhile, she started putting her savings into dividend stocks, reinvesting her dividends to grow her portfolio steadily. Over the years, her income from these investments has grown to the point where it now covers most of her monthly expenses, allowing her to work less and spend more time doing what she loves. Grow your wealth even in challenging times. If you're looking to elevate your financial future, consider adding cash-flowing assets to your investment strategy and watch how they help you build a resilient, wealth-generating portfolio. Thank you for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell to stay updated on all things finance and investing. Looking for more ways to grow your wealth? Check out our other videos for more insights on cash-flowing assets, passive income, and smart investments. Subscribe to Everyday, Elevate To, and elevate your financial future. Comment below, which cash-flowing asset are you considering for 2024? See you in the next video.